The COVID pandemic blurred the lines between the workplace and home life essentially overnight, and research shows it's affecting women and their role in the workforce. Let's bring in Mira Pandit, global market strategist with JP Morgan Asset Management's Global Market Insights Strategy team. Mira, thanks for being here.
Thanks for having me, Heather.
Mira, women are experiencing significant impacts from the pandemic when it comes to leaving the workforce or job loss. Why is that?
Well, part of it is that some of the areas where we've seen the heaviest job losses happen to be where there's a lot of female workers. So, healthcare, education, hospitality. And sometimes it's just that women are leaving the workforce. So, we've seen that 2.5 million women have left the labor force since the beginning of the pandemic. That's 43% more than men who have left. So sometimes it's either that they've left the workforce or that their jobs have been eliminated and they haven't necessarily started looking for work yet again. In fact, about 58% of women who are not in the workforce have not looked for a job in the last month because of the pandemic. And that compares to about 42% of men. And that gap has continued to widen throughout the year. And I think a lot of that is because the demand on women in this pandemic is extraordinary, whether it's holding down a full time job, supervising remote learning, doing the household chores. And at some point, that does become really hard to manage.
Yeah, let's talk about that because childcare, remote learning, they're responsibilities that all parents bear. But is there research out there that's showing women are disproportionately impacted?
Of course, this burden is borne by all parents, but we are seeing a disproportionate impact on women. And in fact, the Boston Consulting Group did a survey that showed mothers do on average 15 more hours than fathers of either educating their children or household chores during the pandemic. Morning Consult and the New York Times also did a survey of both mothers and fathers asking about who's doing more of the responsibilities in the house. And 50% of men said that the work was shared 50-50, whereas less than 30% of women said that household work was shared equally. And this, of course, is an undue burden on single parent households, of which there are 17% in the United States.
So, how can the numbers we're seeing with women and employment impact the economy?
So people are our most vital resource in the economy. So when we underutilize them, we're not reaching our full potential as an economy. And there are many women who are highly skilled and highly trained, and we're not leveraging them to the extent that we can. And this could impact growth in the long run. Because ultimately, the way you grow an economy in the long run is either you help people be more productive by improving their tools, or you increase the size of the workforce. And with women dropping out permanently, that does put a constraint on labor supply and in the long run could impact our growth prospects as well.
Okay, so my next question is twofold. When the pandemic is finally over, how do you see this reversing? And what can companies do to support women in the workforce, especially during this challenging time?
Look, everyone has a part to play here, both public and private. So, on the public side, policymakers can implement policies that support both women and families, whether that's access to affordable childcare, paid leave, even supporting women owned businesses and lending to women. And on the private side, look, corporations can do the same thing, standardizing pay, equal pay, paid maternity and paternity leave, flexibility in terms of hours. And in terms of the talent pipeline, attracting, retaining, sponsoring, and promoting women because we are going to see a challenge to that female pipeline due to this pandemic. And even us as individuals and investors, we are shareholders, we are investors, we do allocate capital. So looking for, in particular, strategies and investments that score highly on ESG factors, particularly that S factor, social, can really help women. And over time, we see that performance of companies that are more socially responsible is better. So McKinsey has done some research that shows for companies in the top quartile of gender diversity, they are 25% more likely to produce above average performance than those on the bottom quartile. So how we invest matters.
A lot to think about. Mira Pandit, thank you so much for your time.
Thanks for having me.